Hey there, crypto comrades. Remember when Bitcoin was going to buy us all islands? Yeah, about that. The crypto market's having a bit of a moment, and by moment we mean a full-blown meltdown. Prices are plummeting faster than a SpaceX rocket returning to Earth. It's enough to make even the most seasoned crypto enthusiasts sweat. But hold on to your hats, folks, because we're diving headfirst into this digital dumpster fire. We'll break down exactly what's happening, why it's happening, and what you can do about it besides, sobbing uncontrollably into your cold brew. So strap in, grab your favorite stress ball, and let's get this crypto crash course started. Okay, first things first, let's look at the evidence. Bitcoin, the OG cryptocurrency, has taken a nosedive. It's like watching your favorite athlete trip over their shoelaces at the Olympics. And it's not just Bitcoin feeling the heat. Ethereum, Binance Coin, Cardano, they're all down bad. Imagine a sale where everything's 50% off, but you're too terrified to buy anything because you're pretty sure the store's about to explode. That's the crypto market right now. Trading volumes down, fear and uncertainty are up, and everyone's trying to figure out if this is just a dip or the beginning of the end. Spoiler alert, nobody knows for sure. Before we dive in, make sure to subscribe to our channel for the latest updates on the crypto market and financial insights. So what's driving this digital asset demolition derby? It's a question on everyone's mind as we witness the roller coaster ride of the cryptocurrency market. The volatility is palpable and the stakes are higher than ever. Well, it's a complicated cocktail of factors, but let's start with the elephant in the room: interest rates. These rates are the backbone of financial markets, influencing everything from mortgages to the cost of borrowing for businesses. Remember those things that used to be so low they were practically non-existent? For years, central banks around the world kept interest rates at rock-bottom levels to stimulate economic growth. Yeah, they're back, baby, and they're not messing around. Central banks are now tightening the screws, raising rates to combat inflation and stabilize their economies. See, Japan decided to tweak its interest rates, which might not sound like a big deal, but it sent shockwaves through the cryptosphere. Japan's economy is a major player, and any changes there can have global repercussions. It's all about something called carry trade. This strategy has been a cornerstone for many investors looking to maximize their returns. Basically, people borrow money in countries with low interest rates, like Japan, and then invested in assets with higher returns, like, you guessed it, crypto. This has been a lucrative strategy, but it's highly sensitive to interest rate changes. But now that Japan's rates are a bit less rock bottom, that sweet carry trade is drying up, leaving crypto high and dry. Investors are finding it harder to justify the risk when the cost of borrowing increases. And to make matters worse, the US Federal Reserve is also hinting at raising its own interest rates. The Fed's policies are closely watched by markets worldwide, and any indication of rate hikes can cause ripples across all asset classes. It's enough to give a Bitcoin bull a panic attack. The uncertainty and potential for higher borrowing costs are making investors jittery, leading to sell-offs and increased volatility in the market. So, as Japan and the US call the tune, the rest of the world dances to their rhythm. The interplay of interest rates, economic policies, and investor sentiment creates a complex and ever-changing landscape. For those in the crypto space, it's a reminder that the market is influenced by a myriad of factors, many of which are beyond their control. But with every challenge comes opportunity. Savvy investors are keeping a close eye on these developments, looking for the right moment to make their move. The key is to stay informed and be prepared to adapt to the shifting tides of the financial world. In the end, while the current situation may seem daunting, it's all part of the natural ebb and flow of markets. Those who can navigate these turbulent waters with a clear strategy and a steady hand will find themselves well positioned for future success. Section 4, the global economic hangover. More money, more problems. Speaking of panic attacks, let's talk about the global economy. It's a roller coaster ride that no one signed up for, yet here we are holding on for dear life. Remember all that money governments were printing a few years ago, like it was going out of style? It was like watching a magic trick, except the rabbit never came out of the hat. Quantitative easing, they called it. A term that sounds sophisticated, but essentially means flooding the market with cash. Fancy words for let's throw money at the problem and hope for the best. It was like trying to put out a fire with gasoline. Well, turns out printing money like it's monopoly money has consequences. Hyperinflation, anyone? It's like the economy's version of a hangover. Inflation is rearing its ugly head, making everyday essentials more expensive. It's not just numbers on a screen, it's real life. Supply chains are still a tangled mess, causing delays and shortages. It's like trying to untangle a pair of headphones that have been in your pocket for a year, and the war in Ukraine is throwing fuel on the fire. Geopolitical tensions are making an already bad situation worse. It's enough to make you want to bury your life savings in your backyard and become a doomsday prepper. And guess what? You're not alone in feeling this way. When the global economy gets a cold, crypto catches pneumonia. The volatility in the crypto market is a reflection of the uncertainty we all feel. People are taking to the streets demanding change, while governments scramble to find solutions. It's a chaotic dance of cause and effect. Families are tightening their belts and small businesses are struggling to stay afloat. The ripple effects are far-reaching and deeply personal. But amidst the chaos, there is hope. Financial advisors are working tirelessly to guide their clients through these turbulent times, and every crisis brings an opportunity for change and growth. Communities are coming together and innovative solutions are being implemented. It's a reminder that even in the darkest times, human resilience shines through. Section 5. Is the crypto party over? History might hold a clue. So the million-dollar question, or should we say the rapidly depreciating Bitcoin question, is this it? Is the era of skyrocketing crypto values and overnight millionaires coming to an end? Is the crypto party finally over? Are we witnessing the end of an era that has been marked by extreme volatility, massive gains, and equally massive losses? Have we reached peak Bitcoin only to watch it tumble from its digital pedestal? The signs are ominous, but history has shown us that the crypto market is anything but predictable. Well, if history's any indication, crypto's in for a wild ride. The financial markets have always been cyclical, with periods of boom followed by bust. And crypto is no different. Remember the crypto winter of 2018? It was a time of despair for many investors. Bitcoin lost over 80% of its value. It was brutal. Many thought it was the end of the crypto dream, but then, like a phoenix rising from the ashes, it came roaring back, reaching new all-time highs. The resilience of Bitcoin and other cryptocurrencies has been nothing short of remarkable. So, is this time different? Are we seeing the final chapter of the crypto saga? Or just another dramatic twist in its ongoing story? Maybe, maybe not. The crypto market is notoriously unpredictable, and making definitive predictions is a fool's errand. The truth is, nobody knows for sure. The future of crypto is as uncertain as ever, and anyone who claims to have all the answers is likely misleading you. And anyone who tells you they do is either delusional or trying to sell you something. The best we can do is stay informed, stay cautious, and be prepared for whatever comes next in this ever-evolving financial landscape.